Hello, everyone. This is Clay Chase with Torrey Hills Capital. Welcome to the Taseko Mines Non-Deal Roadshow presentation for March 14th, 2024. I trust and hope you're all doing well. I want to welcome you to today's program. Like we mentioned here just a minute ago, it's a great day to talk to Taseko, copper producer. Copper now just edged over $4 per pound the last couple of days. I think it's presently around $4.02 a pound. A lot of the pundits and analysts have been calling for this move in copper. There's we believe, a short supply dynamic right now in copper. A lot of the big copper producers are having some difficulty. They're either running out of their higher grade ore. Some of these mines are starting to twilight out. A number of these other mines are having some issues with social and political problems. I don't know if anyone saw this, but about a month and a half ago, the El Cobre mine in Panama, which is one of the largest copper mines in the world, was basically shut down because of a parliamentary edict that came down from them just deciding they weren't going to renew First Quantum's tenure or license to continue to keep that mine open. And that's about 1.5% of world copper. It doesn't sound like a lot, but that's a big deal when you take that much production offline. Another couple of the big projects down in the Peru area are having some real headwinds. You've got the, I can't think of the name of the mine now. It's a Chinese company, NNM owns it, and they're having a lot of disruptions down there too. They're trying to shut that mine, and that's about 1% of copper. So you see these big copper projects come offline, that causes a real supply crunch. And the other side of the equation, of course, is the demand side's ramping up. These electric vehicles, I know a lot of people are either you're really into them or you're really not into them, but it's coming regardless. And you're seeing a lot of demand ramp up for battery production and infrastructure production to support these electric vehicles. And that is causing a very big crunch, and a lot of the analysts are believing that that's going to cause a much higher price in copper over the next couple of years, maybe as much as $6-7 a pound, something like that, which is really a strong benefit for copper producers like Taseko. So after today's presentation, we will do a quick Q&A. If you have questions for Brian, and if you have a question during the presentation, feel free to ask, and we'll get that answered during the presentation. Also, post this presentation or meeting, we'll have a quick survey we'll send out to you. If you can get that back to me quickly, we'll get that over to Taseko Mines as well. Okay, let's get started. Taseko Mines, for those of you who are new to the story, they're a mid-tier copper producer. They have primary operations in British Columbia, Canada. They own and operate Canada's second largest open pit mining project called Gibraltar. They also have a new project that they've just gotten permitted here in the last 6 months or so down in Arizona called Florence. It's a different type of production. It's called In-situ. It's very green, it's very clean, and it's very cheap. I mean, their copper production is just around $1 per pound. So at $4 a pound, you can see these guys are will be making a lot of money when they get that mine opened up in the next year or so, something like that. We'll find out more about that during the presentation. Taseko trades on the NYSE. Ticker is TGB. It's also on the TSX main board as TKO. Shares are currently trading in the U.S. market $1.86 per share. Market cap's on just over $500 million, $537 million. With us today to discuss Taseko's operations is the company's VP of Investor Relations, Mr. Brian Pergot. Hi, Brian. How are you today?
Good morning, Clay. I'm good. Thank you very much.
Great. Well, great to have you on the program. I'm going to go ahead and pass the baton over to you, and thanks for coming on. We're looking forward to the presentation.
Great. Thanks very much for the introduction, and thanks and welcome everyone for joining today. Thanks for taking the time out of your day. As Clay mentioned, it's a pretty exciting time around here for us. Well, we had yesterday where copper went back over $4, but beyond that, just a lot of great things happening at the company. Both at Gibraltar, our operating mine, as well as at Florence, and I'll go over those key initiatives and catalysts that we've had and that are coming up through the presentation. So as Clay mentioned, feel free to ask questions as we go. I'll give you an overview. Going to focus on both Gibraltar and Florence, and if we have time, touch on a couple of other projects. But yeah, let's get right at it. So Taseko, in a nutshell, we are a producer today. We have cash flow from our Gibraltar mine. Gibraltar is in BC, about a 6-hour drive from Vancouver. Very large scale open pit copper mine. It's actually the second largest open pit copper mine in Canada. We did about $190 million of adjusted EBITDA last year, and about just over 200 million of gross profit. And that was all from our Gibraltar mine. So it's a great asset. It's been our foundational asset since we restarted in 2004, and we'll go through a little bit of that history. So we've got production today, and we have near-term growth. And there's not many copper producers that can say they have a fully permitted and financed copper project in North America. We are one of just a couple, if not the only one. So Florence is down in Arizona, just about an hour out of Phoenix on the way to Tucson. As Clay mentioned, we received the final permit needed for construction and operation. We received that, and it became effective in October of last year. It was a long process with the EPA. You know, effectively, we've been permitting this project for 10 years since we bought it. And so it was a very significant day for the company when we got that permit. We'll go over some of the financing and other things going on there, but we are in construction. We broke ground earlier this year, and we are just about 18 months from first copper down in Florence. As we talked about, we have a very strong copper market. Yesterday's move is indicative of the fundamentals, and you know, $4 copper, anything higher than that, we generate a lot of cash, as do most copper producers. We've got a proven team here, the senior team at Taseko, mainly technically focused. We have mine builders and mine operators, so we have the team in place to build Taseko into a multi-asset copper producer. As you can see, all of our projects are in North America, specifically BC and Arizona. It's not by coincidence. We like the North American jurisdiction. You won't see us chasing projects in South America or Africa. We're very comfortable in North America. As Clay touched on, we've seen a lot of issues in South America recently. We don't have to worry about that. Sure, maybe the upfront permitting takes a little bit longer than it might in some of these other areas, but once we have that permit, that is our permit. We don't have to worry about the government you know, stealing their assets or anything like that. So we like North America. This is where we're comfortable. We've got a strong balance sheet. We'll go through that. We manage it, I think, very prudently, conservatively, and yeah, it's you know, we're in great shape and perfectly set up sort of to build our Florence project and sort of to turn Taseko into the multi-asset copper producer. So just a little bit on the cap structure. As Clay mentioned, we're trading about $1.86 today. So we're just off. Yesterday, we hit our 52-week high. And that really has been sort of a resurgence in copper price here over the last little while. And we've seen some excitement come back into the base metals, and especially, you know, and to companies our size, which, you know, for the last few years, you know, we've been below 500 million US in terms of market cap. And a lot of the generalist money hasn't been looking at companies like us, but now there seems to be a lot of interest. And I've been on the road quite a bit here in the last little while, and had a lot more generalist investor meetings in the last couple of months than I've had in the last 5 years, really. So our market cap is right about just over 500 million today. We have 290 million shares outstanding. We finished the year with just under, and I'm going to go back and forth between Canadian and US dollars. I'll try and note when I'm using which currency, but in Canadian dollar terms, we had just under $100 million of cash on the balance sheet at the end of December. And we've got an undrawn revolver. Well, it was actually, we had 20 million drawn at the end of the year, an $80 million US revolver. We do also have some debt on the balance sheet. We've got a high yield note It's due in 2026, so a couple of years from now. It pays a 7% coupon. It was a refi we did in 2021. We took our $250 million high yield note, refinanced it and upsized it to $400 million. And that was to put cash on the balance sheet to build our Florence copper project. And we'll get into more of the details there. The bonds trade publicly, and actually in the last few weeks, they've traded up. And yesterday, for the first time, they were trading at par. And I think that's real indicative of the strong business we have. And you know, we've been in the high yield market since 2011, and there's a lot of comfort with our bondholders, with our assets and our management team. So, you know, obviously they're doing 26, so a couple years away. We won't let these go current, which would be in little under a year from now. So we'll probably be looking at doing a refi of these sometime in 2024, later this year. In terms of analyst coverage, most of the standard Canadian banks cover us, most with a buy recommendation. And yeah, I think we've got good coverage here in Canada. We also do have Stifel and Cantor, who are US based. Major shareholders, we don't actually have any controlling shareholders on our register. We do have a couple of holders who aren't on this list, the largest being 8%, and then another holder about 4%. And then really after that, it drops down quite significantly. Senior management and the board own about 3.5% of the outstanding shares. And then we do have some ETFs as shareholders as well. Actually, there's 27 different ETFs that hold our stock, the largest being the US infrastructure ETF, which is one of our top holders, as you can see. And then also Global X, which is the big copper, ETF, but no controlling shareholders. I'll talk quickly on copper. As we talked about, it's been a great few weeks for copper. We've seen it climb. You know, really, it's been a tough time since 2022 when the price of copper hit $5, and then it's pulled back. Even though it's been trading sort of comfortably in the 360 to 380 range, you know, everyone's costs have gone up with inflation and such. So people, you know, most copper companies have been generating cash, but you know, we've been waiting for this next run. And the difference between previous cycles is we are starting from 375, 380 per pound. Whereas previous cycles, we were starting from $2 per pound or $2.50 per pound. So, you know, we saw $5 copper back in 2022. I think it's very likely we could see it again, you know, possibly even this year. And that's really being driven by supply-demand fundamentals. Demand, there is, you know, Chinese demand has slowed down, but we are starting to see demand pick up in other areas. And but what it comes down to, we believe, it's not so much on the demand side, it's on the supply side. You know, the incentive price for new copper mines today is, you know, $4.25 or higher. And we, you know, pricing has been a long ways away from there. So we're seeing projects get deferred as opposed to built. Two large copper mines have been built and have started production here in the last year or so down in South America, one in Peru, one in Chile. Combined, it's about 400,000 to 500,000 tons of annual production. And that production has been absorbed into the market. And even with that new production, you know, industry experts are still expecting a deficit, supply deficit in 2024. And that's driven by Cobre Panama in Panama, which has been shut down, as Clay mentioned. And then we've seen other disruptions in South America and, you know, companies announcing significant decreases in production estimates. So the supply-demand fundamentals are very strong today. The other thing, which is more of a recent phenomenon, is in the TCRC market. And TCRCs, or smelting costs, are what producers like Taseko, we produce from Gibraltar copper concentrate, and then we have to pay the smelters a treatment and refining costs. So this year, the benchmark for the year for 2024, which was set in the fall, is $80.08. And what we've seen here is spot TCRCs have dropped to about $10.01 in recent weeks. What we know is there are no copper smelters making money with TCRCs this low. And what the news was yesterday is the 15 Chinese smelters got together and they're basically deciding how they're going to curtail production. And what that's going to do is that's going to tighten the physical market. And that's really what drove pricing yesterday. And that there's no short-term fix for that. TCRCs are at all-time lows. The smelters need to shut down their capacity to tighten the concentrate market and ultimately the physical market. And that's, like I say, it's not a short-term issue, and it could drive pricing even higher in the short term. So it's a positive sign for copper producers.
Hey, Brian, we had a question earlier. I'm sorry to break in on this, but can you tell us who the 8% owner of the stock is?
It's actually a fund out of Brazil. They bought all that stock, about 23 million shares in 2022 and 23. They're called Fourth Sale. And
Fourth Sale?
Yeah, out of Brazil, yeah.
Okay, great, thanks.
Holders, they're active. It's actively managed money. I speak to them on a regular basis. So they're big believers in copper. So yeah.
Great, thanks.
And then just finally on copper demand, the EVs is what we see every day. Actually, I saw my first Cybertruck on the road yesterday. I'm not sure if any of you have been to Vancouver lately, but Vancouver on a per capita basis has more EVs on the road than anywhere else in the world. Tesla's building their biggest shop and showroom, I think, anywhere in the world here in Vancouver in the next year. But, so EVs are easy to point to, but, EVs aren't going to drive demand. It's increasing, but it's starting from a very low base. But where this will impact the copper market is not so much the car, it's the infrastructure. Everyone who buys an EV wants a rapid charger at home. That takes huge amounts of copper. And then even bigger picture, just the whole grid, in Canada and the US, it's aging. It needs to be upgraded to be able to handle this electrification. So yeah, the EVs are, easy to point to, but it's everything else that comes along with them is where the real demand comes from. So yeah, we're very bullish on copper, and we think both, short, medium, and long term, we could see the price, dramatically higher, in coming months and years. So talk a little bit about Gibraltar and Florence now. So Gibraltar is a very large open pit copper mine. As I mentioned, it's in BC, just a little bit north of Vancouver. It still has 20 years of mine life ahead of it, 21 years of mine life ahead of it. And the average production over that 21 years will be about 130 million pounds of copper per year. Cash costs at Gibraltar are probably our third quartile. It's a little bit on the higher cost because it is lower grade, but we produce copper there for about $2.30 per pound. In 2023, our cost per pound was $2.37, and that's because we had higher costs in the first half due to some lower production. To replace Gibraltar today, we save north of $1 billion US. I'd say in today's market with inflation, it's probably closer to $1.5 billion. So we actually bought Gibraltar in 1999 for $1. It was built in the 70s, early 70s. And the previous owner had shut it down in 1998. At that point, it was a tired, worn-out mine that needed some capital investment, and they weren't willing to do it. So we bought it for $1. We kept it on care and maintenance until 2004. And then price of copper started to climb from, it was around 70, 80 cents. It started to climb, got over $1. So we restarted it with the idea we would have a couple of years of higher copper pricing, and back then higher copper pricing was $1.20, $1.30. We could generate a little bit of cash, and then when the price of copper dropped back below $1, we would shut it down again. Well, price of copper never cycled back, and we saw an opportunity here to start investing some capital and to modernize it and expand it, and basically turn it from a swing producer to a copper mine that can generate cash through all points of the copper price cycle. So we ended up spending $800 million to expand it and modernize it. And it was really a 7-year project from 2006 to 2013. We took it from a processing capacity of 30,000 tons per day to what it is today, which is 85,000 tons per day. We replaced the entire mining fleet, all new trucks, all new shovels. So what we have today is effectively a state-of-the-art, long life copper mine. And it's been running steady state really since 2014, as you can see in that graph there. More recently, 2022 was a tough year, and you can see we produced just under 100 million pounds. And that's because we transitioned into a new pit, the Gibraltar pit, and we had some challenges in the upper benches with mining dilution. So we had a tough start to 2022, and then we started to get things in order in the back half of that year. And as you can see, in 2023, we had a significant rebound in production. We produced 123 million pounds last year. So we're trending back towards that 130 million pound average. In 2024, we've given guidance of 115 million pounds. And why production is a little bit lower this year is we have two significant downtimes we need to do in the mill. The first one was to replace a component in the number one concentrator, and that was actually completed in January. It was expected to be a 2-week down, but we did it a little bit under schedule, and that was a very successful maintenance. In Q2, we've got another 3-week downtime, and that's to move a primary crusher. It's a project we've been working on for a year and a half now. It was a $50 million project, and we're relocating a crusher which sits on the new pit we're moving into. So we actually we spent a year and a half preparing the new site, and then in June of this year, we physically moved that crusher to its new location. So we have about $10 million remaining to be spent. We've spent about $40 million already. So because of those two downtimes, production's a little bit lower this year. And then next year, we should be back up much closer to that 130 million pound average. And then in 2023, we had a great year. As I mentioned, we produced 123 million pounds of copper. It was more weighted to the back half of the year. But we did $190 million Canadian of adjusted EBITDA and a little over $200 million of earnings from mining operations. Gibraltar, produced $150 million of cash flow from ops as well. So, this asset, it's a large scale, it produces a lot of copper. Average price of copper last year was $3.84. And so you can see the type of cash it can generate. We're now at $4. Basically for every 25 cents US of copper price increase, that increases our cash flow by about $40 million Canadian. So it's highly levered to the price of copper. So that's Gibraltar. It's been our cornerstone cash flowing asset. We've taken all the cash we've generated from Gibraltar over the years, and we put it both into Gibraltar and our other assets. And, like I say, we've got 21 years of mine life ahead of us here still. So it's going to, continue to be a cornerstone asset for us for the foreseeable future. Let's talk about Florence now. And this is really the exciting part of the story, I believe. As I mentioned, we've been 10 years since we bought this project. We've been working away at it. And last year we had some, key milestones we achieved. So we're now moving forward. It's going to be a different type of mine. It's not going to be an open pit like Gibraltar. We're going to use a technology or a process called in-situ leaching, which I'll touch on. We have started construction here. And then what we're going to produce at Florence, as I mentioned, at Gibraltar, we produce a copper concentrate, which needs to go to Asia for further smelting. At Florence, we're going to produce a pure copper cathode. And that picture there, those sheets of copper, that's 99.99% pure copper. And we produced these sheets from a test facility, which again, we'll talk about. When in production, Florence will produce on average 85 million pounds of copper per year. And again, a long mine life of over 20 years. The other great thing about Florence is very low upfront capital and low operating costs. We'll produce copper here for about half of what we produce at Gibraltar at about $1.10, $1.11 per pound. That's first quartile on the global cost curve. It's a very low cost producer. And that's because of the process, the in-situ leaching process that we're going to use. So we bought Florence about 10 years ago. We spent that 10 years both doing a lot of technical work here as well as permitting. We issued the latest feasibility was about a year ago, March of last year. As you can see there, based on 375 copper, it's got a nearly $1 billion NPV, 50% return and a 2.5-year payback. So the economics of Florence are fantastic. And that's because of the low upfront capital of $230 million and the low operating costs of $1.10. So, it's a fantastic project, and, we've been working away at it, just trying to get it through permitting, and finally we've got that, and we can see production. The light is at the end of the tunnel. We're getting there. So how does in-situ copper recovery work? This is a process that's used commonly for uranium and also potash, or otherwise known, it's also called solution mining. And the reason we're using this process here is because we have a very unique ore body at Florence. Typically, copper is found in hard rock, like we have at Gibraltar. And there we need to drill it, blast it, crush it, grind it, regrind it to remove that copper from the rock. At Florence, Mother Nature's done all that work. It's a highly fractured, rubbleized ore deposit. When you pick up the core in your hand, it just crumbles. And because of that, it makes it amenable to this type of mining. So what we're going to do is drill a well field. That well fielding consists of injection wells and recovery wells. Each injection well is surrounded by 4 recovery wells. We inject a solution down into the deposit. As that solution migrates through the deposit, it leaches out or dissolves the copper, and then we recover that copper in the solution through the recovery wells. And then that solution goes to a conventional SX-EW plant where we extract the copper and produce the copper cathode. It's a very, I don't want to say it's a straightforward process, because there is a lot of technical complexities associated with it. But it's a great process, and we're very lucky to have the type of ore body we do, so we can use this process. The other benefit, not just on the cost side, but the other benefit is on the environmental benefits of in-situ leaching. As you can see there, energy consumption 65% lower, carbon emissions 70% lower, and water use 80% lower than a conventional open pit copper mine. We're not digging a big hole, so there's no permanent change to the landscape. When we're done here in 25 years, the Florence site could be turned into a golf course, a residential neighborhood. When we're operating, no one will know we're operating there. It's not like we're blasting or there's heavy equipment being used. It's just little wellheads sticking out of the ground. So it's very low impact mining. And that's, one of the reasons why we had very good support from the town of Florence and why we got our permits from the state and the EPA. So because in-situ mining or in-situ recovery hasn't been commonly used for copper. We built the project in 2 phases. The first phase was a production test facility. We had to go through a whole permitting process for that. We got those permits in 2017. Then we spent $25 million to build that test facility. It was 24 wells, which included 4 injection wells and 9 recovery wells. We ran that test facility for 18 months in 2018 and 19, and we produced 1 million pounds of copper cathode. And the reason we built that test facility was, 1, to prove that the process will work at Florence. It was very much a success. It proved out many of the modeling assumptions from our technical reports. And it was a chance for our operations team in Florence to learn how to ramp it up and how to operate it. And then we also operated it to prove to the regulators that we can inject solutions 800 feet down, control those solutions, recover those solutions, and protect the environment. And again, we were able to prove that, which is why when we went through the permitting process to amend those permits for commercial production, we got both those permits. So the first one came from the state, and that was the Aquifer Protection Permit, which we received at the end of 2020. And then the EPA went through their process in 2021 and 2022 and 2023. And we finally got our EPA permit it became effective on October 31st last year. So it's fully permitted, and yeah, it's now in our hands and up to us to execute. So permitting is done. Now on the financing side, as I mentioned, as of March of last year, we had $230 million remaining to spend. We've already invested about $100 million on long lead items, and we did that in 2021 and 2022. So we had the $100 million of long lead items that's at site today. And then beyond that, or after that, we had about $230 million left to spend, and we're just starting to spend that now. So that 230, you can see there, a big portion of that is construction contracts. So we've just actually signed a fixed price contract with a major engineering firm to build the SXEW plant, and that's roughly $100 million. So about 40% of the remaining capital is now committed and locked in. The other component, significant component of this build is drilling the initial well field. So we have about 90 injection and recovery wells to drill over the next year and a half. So the drilling started a few weeks ago, and they completed their first drill hole just a couple days ago, and drilled to depth, encased, cemented, and collared. And that was done on time. So that's another big part of the build out of Florence. And then we still have some materials to purchase, and then the indirects and contingency. So we're in really good shape in terms of capital and spending over the next year and a half, with a lot of it locked down today. So in terms of financing the $230 million, we've done 4 different transactions at the Florence project level. And I think these are really good, strong endorsements of the project, because we've brought in some really good partners who are putting up significant cash into this project. So we entered into a partnership with Mitsui & Co. out of the US, and they're going to provide $50 million upfront for construction. And in exchange, they get a copper stream. They get about 2% of the copper for that 50 million. And then they've got at their option, they can invest a further $50 million, so for a total of $100 million, and that copper stream converts into a 10% equity ownership. So that's $100 million for 10% of the project, which is in line with our $1 billion valuation. But we'll have $50 million available for construction. We've also done a royalty with Taurus Mining out of Australia, and that's a $50 million revenue royalty for 2% of the royalty, 2% of the revenue. And then we've done a senior project facility with Société Générale, SocGen. And then finally, a $25 million equipment leasing with Bank of America. So that totals about 175 million of that 230 million remaining. Beyond that, at the end of December, we had, between cash on hand and our corporate revolver, we had roughly $130 million US of available liquidity. So as you can see on the graph there, between these four partners, as well as our cash and corporate revolver, we've got the necessary funds. And then on top of that, we have cash flow from Gibraltar. Now, obviously, cash flow from Gibraltar depends on copper prices. And so we can't count on Gibraltar cash flow because we can't control the price of copper. But, today at $4, things are looking really good. And we expect that Gibraltar will be able to contribute some cash towards the construction of Florence. So we're in really good shape from a financing perspective. Just a picture of the long lead items that we have at site today. These are all the key components of the SXEW plant. So again, this project, from a construction point of view, is quite straightforward. This is not like building an 80,000 ton a day concentrator at 4,000 meters in the Andes. We're an hour out of Phoenix. We have access to all the trades. It's a real mining district, so there's a lot of technical folks available to us, and we've got really good engineering firm and consultants working with us on this. So we expect first copper in the fourth quarter 2025, so about 18 months from today. And it's Florence is going to transform Taseko. It adds about 70%. Increases our production by about 70%, brings down our consolidated cost because it's so low cost, and it will more than double our cash flow. So we've got a few more minutes here, so I'll touch on a couple of other projects. Yellowhead, which is in BC, just a couple hours from our Gibraltar mine. This is a large project, and actually Yellowhead would double our production again. It will produce 200 million pounds of copper for the first 5 years of its life, and then 180 million pounds of copper over its 25-year life. So it's a large mine. It'd be a similar scale to Gibraltar, but it's higher grade, so therefore produces more copper. We've been working away here for the last few years. Most of the work we've been doing some technical work, but we've been really focused on engaging with the local communities, including the First Nations group in the area. We expect later this year to formally enter the environmental assessment phase, but we have 3 to 4 years of EA work to do here. So the timing fits very well in that we'll have time to build Florence, ramp it up, get it cash flowing before we're construction ready at Yellowhead. In the meantime, we don't have to spend a lot of money here as it works through the environmental assessment. So it doesn't take away much from our corporate resources. And when it's construction ready, say 4 years from now, we'll be a much different company with cash flow from both Gibraltar and Florence. But because it is larger scale, also is a higher capex. It'd probably be $1.5 billion to build today. This is a type of project we most likely would bring a joint venture partner in to help us with. But it's a great mine in a great mining jurisdiction, synergies with our Gibraltar mine, and we'll just keep working away on it, and we should be construction ready here in say 4 years from now. Finally, I'll just touch on New Prosperity. For anyone who's followed Taseko for any amount of time, you'll know Prosperity, or used to be called Prosperity, now New Prosperity. This is one of the top undeveloped gold copper projects in the world. Again, in BC, about 150 miles from our Gibraltar mine. There's 13 million ounces of gold in resources here, 5 billion pounds of copper. This is a huge resource And unfortunately, the resource still sits in the ground today. This gets, the issues here has been permitting going back to 2012. We received an provincial EA certificate, but we got turned down by the federal government. What's changed here is we've been at the table with the local First Nations group in this area for the last few years, trying to find a path forward for the project. Very limited what we can say about those discussions, but I can say that significant progress has been made. And in our fourth quarter financials, we stated that we've extended legal standstills for another year with the expectation of finalizing an agreement at Prosperity. And that's about all we can say at this point. Those discussions have been ongoing. Like I say, we've made good progress. And we're just trying to find a resolution and a path forward for this project. So we'll keep at it. This project is too valuable to Taseko, and the provincial government is involved with these discussions as well, because provincially this project is very valuable. The amount of money, tax revenue it would generate for the province is significant. So we'll see how things play out here over the next few months, but there's a certain level of optimism that we're going to get a deal done here. So I'll just wrap up.
Hey, Brian.
Yeah.
Real quick, while you're still on New Prosperity, we have a question. It says, what reasons did the federal government give for turning down the project?
If we had another couple hours, we could get into it. They cited environmental reasons, and it is quite complicated, and it takes quite a bit of time to explain, but it came down to environmental reasons. But we got turned down in 2010. We got our engineers back to the drawing board. We addressed the issues that the federal government had. We entered into the EA process again in 2012, and we got turned down a second time. So it was a bit of a moving target. There's political issues at play. So there's more than just environmental. And that's what we're trying to work through with the First Nations group right now and the provincial government.
Okay, great.
Whoever asked that question, you can feel free to tell them to call me, and I can get into more specifics and details, but I don't think we have time for that.
Yeah, Jeff, if you want to get Brian's phone number, just send me a text or an email and I'll get that for you.
So just, copper resources is what makes a copper company. When you look at what we have in the ground in terms of the billions of pounds of copper, nearly 15 billion pounds of copper in resources, not including the gold at Prosperity, not including our Ali Niobium project. You look at companies much larger than us. Hudbay's got $1.5 billion market cap. Capstone's got a $5+ billion market cap. Oz Minerals was bought for $8.5 billion, and they have far less pounds in the ground, and on a pounds per market cap basis, much less as well. So over the years, we've picked up projects inexpensively, and now we just need time to unlock that value by advancing these projects and moving them towards production. And that's been our strategy as long as I've been here, which is 18 years now. And it takes time, takes energy, takes patient investors, but we think that's the best way to unlock real value for our investors. And that's what we've done at Florence, and we're now moving ahead there. And I'll just finish with this slide. And this is really what we see as the opportunity for investors. Gibraltar today, our 87.5% of Gibraltar, and this is in Canadian dollars, has a $1.3 billion NPV. Florence, in Canadian dollar terms, has a $1.2 billion NPV. You take off our net debt of about $550 million, leaves an implied equity value of about $2 billion. And in Canadian dollars, we have a $700 million market cap today. So there's a huge disconnect, a $1.3 billion disconnect between our enterprise or our equity value and our market cap. And we believe most of that that value gap, it relates to Florence. We're getting very little value for Florence in our equity today. And we think that's going to change over time. We've now got the permits, we've now financed it, we're now in construction. Some of that value has to start to flow into our equity. And as we get closer to production, I think we're going to see that value gap steadily close. And like I say, there's very few copper companies that have the type of growth we have in the jurisdiction we're in. When we have both Florence and Gibraltar operating using 375 copper, we're going to generate somewhere between $400 and $500 million of annual EBITDA. Relative to our market cap of 700 million, that's there's a disconnect there. And sure, a year ago, before we had permits, before Florence was financed, I could understand that. But now, the fate of that project is in our hands. Sure, we still need to execute, build it on time and on budget. But I trust our team that we're going to do that. We're going to successfully execute here. And yeah, I think that valuation gap is going to close here over the coming months. And that is, that is the opportunity for our shareholders. And we've seen a big move in our equity here in the last, even in the last week. And that's just the start, I believe. And, I'm talking, at 375 copper. So we have the potential share price appreciation from, that value gap closing, but also as the price of copper climbs, which will be reflected in our financials and everything else. So I think it's a very exciting time. I think it's a great time for our investors. We've got a lot of investors who have been patiently waiting for Florence to get permitted. And I think, everyone's going to, I think patience will be rewarded. So with that,
yeah.
If there's any questions.
Great presentation, Brian. Thanks so much. And sorry to break into your conversation there. For us, it's really a matter of where you're located. That's so key. And the fact that you're in all these very geopolitically stable areas like North America, which is really where you are only at. And you see all these other projects, because we do watch the global copper market pretty closely. And that mine that I was talking about earlier, I can remember the name, that's Las Bambas.
Oh, Las Bambas, yeah.
Yeah, if you read much about Las Bambas, it's been ongoing, and it doesn't look like it's going to get resolved at any time.
It's only been in operation for under 3 years, and I think in 2022 it was shut down 5 times by villagers.
Yeah. They roll telephone poles into there and light them on fire, and it's a real mess. But that with combining that with your low cost production profile at Florence, you say that people need to see that you can build it on time and on schedule, but you've kind of already you've already built it once. You built the pilot facility, which is the same scale as the production facility, just on a portion of the project area. So I'm sure you have a lot of experience in constructing it from that effort. And so I'm sure you're familiar with and you said you got these 2 holes are now down to total depth, and it sounded like you had no surprises there. So looks like it's pretty straightforward going forward. And I think another key issue here for us, and why we're so excited about what you're doing at Florence, is that it's really, really difficult to get a project online. And, if copper prices do move into the $5 handle, it's very difficult for these other big players to turn up the volume on their production quickly. It takes, like you said, 20 years to bring a new copper project online. There's not many of them in the pipeline right now. I think that's going to bode well for copper pricing going forward. If you have a question for Brian, feel free to ask. We've got just a couple more minutes here, about 4 or 5 minutes. We do have a hard stop at 10 o'clock today. I want to thank everyone for coming on. If you'd like to ask a question, you can do in the chat or the Q&A, or you can raise your hand. Today's code word for your survey, post-meeting survey, is the project Florence, Florence. We recommend that if you have an interest in Taseko, to go onto their website, and there's a lot of additional information. There's presentations online. There's also additional information about each of the projects. One real quick question on Yellowhead is, have you reached a production decision there to move forward, or is that still based on some kind of definitive feasibility studies that you need to do there, or is that a question that makes sense?
Feasibility study is complete. We won't get to a final investment decision until after we get through the environmental assessment. So we're 3 to 4 years away from that decision.
Okay, fair enough. But at this point in time, it looks like that could move forward as you build out these other projects.
Yeah, it's another very good
project. Like you said,
yeah,
would be very good. And so you're looking at almost a double in production and a doubling of the cash flow, with Florence coming online in another year and a few months, likely to start first production.
18 months.
Year and a half. Yeah, great. And then another 4 years, you're talking about another double. So I can see why some of the generalist investors are looking at Taseko now. It's a great way to play copper.
Yeah,
sure.
We believe so.
Okay. Any final comments before we close it up here today, Brian?
No, thanks again, everyone, for taking the time out. If you have any follow-up questions, you can definitely get a hold of me. And good luck, everyone. And we'll maybe see you in person or do another Zoom here in the next couple months.
Yeah, we definitely will. Well, great. Thanks so much for coming on today, Brian. Really appreciate it. Exciting what's going on there. Really, we've been with the company for quite a while, and everything they've said they're going to do, they've done, which is great. You said you're going to open up Florence. Now, get it permitted. You did. Now you're starting the construction. You're doing that right now. So we're expecting to see that production come online here at some point in time. For everyone that came on to the program today, thanks for your time. We'll be sending you the brief survey here shortly. If you'd like additional information on Taseko, obviously it's available on their website at Taseko, Taseko mines, mines.com. And we'll look forward to having you on a future presentation with Torrey Hills. If you'd like to see this presentation again, it will be uploaded to our YouTube channel later today. If you have someone that would like to view it, just send me an email. I can get you a link. Brian, thanks again so much for coming on. Look forward to seeing you here in the near future.
Thanks, Clay. Have a great day.
You bet. All right. Thanks, everyone, for coming on today. We'll look forward to having you on a future presentation with Torrey Hills Capital. Until then, be safe and be well. Great. Thanks, everyone. We'll talk to you soon.
Bye-bye.